Welcome to the REI Foundation Podcast, where we cover all the steps and strategies to make your real estate dreams a reality. Now your hosts, Jason and Peely.
Hi again, this is Jason with the Real Estate Investing Foundation Podcast. Welcome back to today's episode. We're really excited for today's guest. We want to welcome in Justin Grimes. Justin, hello, how are you?
Good, thanks, Jason. How are you?
Doing great. And a little bit more about Justin. Justin and his wife, Brittany, have two baby boys, Jensen and Cooper. He was born and raised in South Houston and committed to maintaining multiple streams of income, and is currently an active rehabber, mortgage note creator, and a passive commercial real estate investor, an investor operator in online businesses, and an equity partner in oil field equipment company. Wow, you have a lot going on. And you have a couple small kids. So hey, before we get into your background, let's start in, how do you do it all?
Yeah, not much sleep, I guess, and a lot of help. So I have tried to do it all myself in the past and fallen right on my face. So I'm a big believer in teams now and systems, and it's a learning process, but I'm never bored. That's for sure.
That's cool. I'm sure you're not, especially with young families. So if we look back about your real estate career, you seem to have at least dabbled in a number of different spaces. Where did you get started and why?
Yeah, we could go back. So my initial rental asset that I had, I bought a place when I got out of college that was a pretty cool little bachelor pad on the water. When I met my wife, we bought a house, and I decided to rent that because why not? So with my W-2 income, it helped nice with tax write-offs and things like that, but it was consistently wiped out. As you've heard the stories on the cash flow, it'd get wiped out with an AC repair or something like that. So, I kind of meddled in it for a while, and just it did its thing, but it kind of got kicked into high gear. My interest in real estate, that is, in 2016, we lost my father in an auto accident. And from that, my family, unfortunately, came into some money. And from that, I needed to figure out what in the world to do. All I've ever known is, stocks and bonds and, that kind of stuff. So we did put some money into that. And then over the last few years, what we've been doing is moving that money into passive real estate investment opportunities through commercial syndications. So that's kind of the high level view of how I got to where I'm at today.
Sure. Well, I'm sorry for your loss. And if we look at what you're doing with the money, why did you take it out of the familiar territory of stocks, bonds, and move it over to real estate? What really triggered that?
Yeah, I'd say, we're losing sleep. I'd say watching the market or in fear of what was going to happen next. Ultimately, the market kind of, it just does what it does, and real estate does as well. But ultimately, to have that comfort of a physical asset tied and collateralized with your capital, just made us sleep a little bit better at night. So we're committed to maintaining a diverse portfolio. We still have some stuff in the market, but our focus is to really build out relationships and with teams of operators who can help us protect that capital and grow wealth for future generations is kind of the vision.
That's great. And you have a couple different components: the passive side and the active side with the flipping and with mortgage notes. How do you split it? How active are you versus how passive are you?
Let's talk on on the multifamily space or the commercial syndications. We work with 4 groups right now that do, self-storage, mobile home parks, and multifamily apartment investments. We're limited partners in those, earning a preferred return and then an equity split at exit or based on the profitability of operation. So, that's a powerful space if you have the accreditation or, if you can play in that arena. That's a powerful place to put your money because of the tax incentives and accelerated depreciation and some things like that you well know, and I know your listeners are familiar with. So, for my mom's stuff, that's kind of where we play. I'd like to get more actively involved in that, but realistically, with only so many hours in a day, I find it best to, kind of take a step back, focus on the relationships and who those operators are and what their goals are, make sure they're aligned with us, and then let them do what they're good at.
What are some ways, if someone is looking to follow in your footsteps and invest passively, to vet the operators?
So we look at a couple of things. A track record is important, but not everything. It is a place where, that helps to begin to gain some comfort. But when I get on the phone with these guys or ladies, it's just a conversation. I want to understand what their objectives are for, in the long term. If they don't mention capital preservation and things like that, ultimately I'm dealing with my mom's money here, so I want to make some money too. But the last thing I really want to do is lose it. So things can happen, but if that's not one of their top goals, then that's one of my most important things. So we may not be aligned if we don't talk about that type of topic. Some of my, you go ahead.
What would be a couple trigger points that you would realize ultimately that this isn't the right relationship?
If they don't mention the importance of capital preservation for them, rather they're you just focused on, forced depreciation or hoping that, the market's going to continue to uptick, or some other things related to finance terms and things like that. If they're not very conservative in their numbers as far as what their budgets are, or their exit timelines, or how they have this financed with debt, then those are some things that, the little I do know, those are just some things I don't want to get involved in. And with the operators that we are involved in, they kind of fit maybe our risk profile a little bit better. So,
so if you're looking at this and you were talking about the underwriting component of this, if you're going in there as a passive investor and maybe you're not fluent in investing in apartments, do you feel it's important to become versed in underwriting properties before you vetted out an operator, or is there ways that you can go in there and vet the operator without being completely fluent about underwriting the property?
Yeah, I'm trying to educate myself more on the whole underwriting process, but one of the components that we look for is I'll ask to talk to other investors that are active in their deals, or as limited partners, and see what their relationships have been like. One of the main things I enjoy about the partners we do work with is communication. I mean, at least once a month, once a quarter at most, or at the very least, we get updates and, on rent rolls and the P&L and things like that. And that just helps me be able to, offer some information to my family. They got a lot of trust in me to make some of these decisions, and I'm doing the best I can. But to be able to give them that information, whether they just put it in the, spam box or whatever, they've got it available to them, and I feel pretty confident in that.
Absolutely. And would you expect, as a passive investor, you're expecting quarterly or monthly emails, or do you want calls, or what is your expectation?
Yeah, mine, I think the email is the best thing. If they have conference calls and things like that, that's fine. But I think that's the most efficient for me, because I can save it for later and read through it and really dig into it when I actually do have some time that's convenient for me. So, yeah, I enjoy the operators that we work with who do that. I think that's a differentiator that is important to us.
Would communication on a deal that was not really up to par keep you from investing with them in the future?
If they're not communicating about it until, hey, look, 3 months ago we had this happen and we kind of kept it quiet for 2 months, hoping we'd work it out, but just didn't work out. Well, been interesting to have that conversation as you go. So, I can help. I don't know. I know a lot of people, or I know a fair amount of people in this space that have kind of been there and done that. So, man, maybe I would have had an idea to put you in touch with this guy who'd also been through that situation, and he could have helped guide you rather than you just try and figure out. So yeah, I would say so. I mean, if it hits the fan as it tends to do in life, yeah, let's talk.
So absolute transparency would be a huge item from an operator side that you would definitely want to have, regardless of good or bad. You'd want to see it through just to understand what's happening throughout.
I do. And I think that's maybe a personal preference. There are probably people out there that would rather not know until it's just too late. They don't want to worry about it maybe. Yeah. So I don't know. For me, I'd rather, face it head on and see what we can do. You got to be resourceful in this space and in life, and things come up, and maybe we can work something out.
So you're investing in multifamily. You said also multifamily, then also mobile home parks and storage units,
Right.
Self-storage. Is there one space you prefer to stay within as a passive investor, and why dabble in so many?
I think it comes down ultimately to diversification. So, I think as the economy, goes through its next cycle and things like that, those are all three very unique opportunities to capture, earnings. Those are all probably unlikely to go anywhere really. People may stop buying houses or things like that, but people need a place to live. People need a place, as baby boomers downsize, they need a place to store things. And, that lower price point that maybe mobile home parks offer, that's an underserved market as well. So, and then geographically, we kind of have them spread out with those operators. They kind of operate in more of a region, I'd say. That's their specific niche where they have teams and processes built out. And that helps as well. If the oil and gas industry goes downhill, Houston's heavily impacted by that. There are other industries here, but, with medical and things, but places like Dallas and some of those others, they're super diversified on different industries that are involved in that city or, submarket. So that's an interesting place to invest.
Now, are you looking to solely invest in Texas? Are you comfortable investing? How far are you comfortable investing?
Yeah, no, we've got stuff as far as California and, over to Atlanta, some things into Indiana and things. And these are all with those particular operators on our side passively involved, So geographically, though, it is spread throughout the country. From active stuff, we don't, I just focus on kind of where I can go look and feel, touch it, see it happen.
So let's talk a little bit more about your active stuff. You're actively flipping homes. What is it? What is a bread and butter flip for you?
Yeah. So what I've got is a business partner down here, and we create mortgage notes. It's an owner financing model. So like a traditional rehabber will buy something, let's say $50,000. It needs $20,000 in work. So I'm 70 in, and the value is $100,000. What we'll do is put an owner in there. We'll sell it to them for 100. We take let's call it 20% down. So there's $20,000 cash occurrence. And then we structure a note, $80,000 note on a 15-year amortized schedule, and basically become the bank, So there are a lot of components to it. And we can get into all that however you like, but there's a lot of players in that, on that team to maintain regulatory compliance with, non-predatory lending and all of that stuff. So that's the basic gist of how we do that.
And so you're protecting yourself. How is the bank?
So as the bank, but we plug in an investor in a first lien position. So we raise that capital at $70,000. Somebody owns that first lien for $70,000. We'll carry a second lien, and our note will be $80,000 with the buyer. And then we have a spread, so if we're being charged 8% by our lender, and we're charging 10% to the buyer, there's a spread in that interest rate cash flow. So a couple of ways to do it. You can also sell a portion of the note, a portion of the payments. For example, if you just wanted to sell the first 10 years of the note on a 15-year amortized schedule, then, the back end of that still leaves some meat on the bone for my partner and I. If that buyer's still in place, there's still $40,000-$50,000 worth of income that can come off of that last 5 years.
That's awesome. In New Jersey, we can't even buy a driveway for $70,000. So
Yeah, I believe it.
love hearing these stories here because that's awesome. So really, really interesting on that topic. And if you had the choice and you just had to pick one way, focus all of your money now into the passive side or the active side, where would you rather fall?
I would do probably the commercial space. I think there's multiple doors and multiple opportunities for income streams is just a winner in my book, as opposed to the single door. What I like about notes is the flexibility and the protection that you have tied to that physical asset in Texas. It's it's a non-judicial state, meaning foreclosure here is not as painful as other states where it may take up to over half a year to get a non-paying occupant out of the property that you need to fill. So here it takes about 60 days. So we underwrite those to set everybody up to win. And unfortunately, if they don't go right, Texas offers some opportunities to make the situation, just to protect the investor ultimately.
Yeah, and that's great. And we, of course, are on the other side of that here in New Jersey. So it could take a decade to get people out of, especially if you know the game. And you had spoke a little bit about your time is really setting you from doing your own syndications. Do you have so many things going on here? Do you have a point where it would make sense for you to go out there and do your own syndications? And what would those steps look like?
Yeah. So kind of in the short term, my plan is to continue to develop these relationships with those higher level operators who are doing it day in and day out. At this point, I don't have the time to really bring value to as an active partner or member in that operating agreement or whatever. So long term, though, I'm basically setting up the note business as it's getting its systems and teams in place and allowing that thing to kind of just perform on its own as its own standalone business. And then, with time, I would like to jump into that space more as a, just a partner in a deal. We'll be able to bring the capital. I will have some experience from a limited partnership perspective, and then, be able to bring that value and to the team. Perhaps raising capital is what I do for our note investing business, and compliance is what I do in my W-2 job and for the note business as well. So there's a heavy component of that in syndication as well, and I enjoy that kind of work.
And it carries a long way. So if you act as a passive investor in a multifamily syndication, that actually carries a lot more for agency at Fannie and Freddie than if you were out there flipping 1,000 homes. They don't care. They want to see your experience relative to it. So that's going to go a long way for you. And looking at where you stand today with all of these businesses, where do you see your trajectory next year, next 5 years? Where are your goals?
Yeah. I'm focused, as far I have a W-2 job, I do have an equity component there that, heavily incentivizes me to maintain growth and things at that business. So, I work there about from like 7 to 4, 5 o'clock daily. Then I come home and play with the kids for an hour or two, and then, hang out, eat dinner with the wife, watch TV, and then get back to work. So, as that goes, I'd like the role in real estate to not necessarily replace a job one day, but to continue to just offer freedom, financial freedom, ultimately, to where, I'm able to do what I want to do, not what I have to do, kind of stuff, so vacations aren't, I don't need to map out my year in January to figure out how many days I have to take off in December when Christmas comes and my wife wants to go visit her family. So that's, long-term vision. That's kind of what I want for my family, is to be able to take those trips and make those memories. And that's kind of the idea of the real estate and multiple businesses getting off the ground at once.
And that's a great point. We hear so much that people just want to do real estate to quit their job, but it's not the only option. There are a lot of people who like their job or have another career that they really like doing, and you don't have to quit to just jump out of it. And that's definitely a good example of why not. If you were backtracking, say, to your start, and were to look back where you were today and knew everything you know now, what would you tell yourself when you were starting out? What actual step would you start with?
Oh, I would get my mind right. When my first flip was a nightmare, I tried to do it all on my own, didn't have teams in place, and it was a real painful experience. So to just be ready, be resourceful and be ready for the challenges that are going to come just in any business, whether it was flipping a house or just starting something from scratch. You got to keep moving. And you gotta, just don't give up.
That's great. And do you have a morning routine, or what do you do to get your mind right?
In the evenings, I'll write down some affirmations, that have one business related, one personal, with my family, and try and get my head in a good spot so I can get some good rest. And then in the morning, a couple days a week, I'll get on the elliptical and work out a little bit, and then I wake up the kids, play a little bit, and then head out to the office. So nothing super Tim Ferriss like or anything, but it works.
It works for you. That's right.
My drive to the office is about 20-25 minutes. So there's some, you guys podcasts and a couple others that I would just plug in and I listen to them going to and from. And so I'm a big podcast fan. I think that windshield time is valuable to me.
It sure is. And I'm the same way. There was a couple of years where I was driving like 100,000 miles a year, just looking at job sites and podcasts. I mean, that was a full-time education right there. You can get so much of it, and it's amazing the information that people share out there, just like you are today. Thank you so much.
Yeah, absolutely.
Is there some words you live by?
I looked at something the other day. I think it was Henry Ford who said, "Whether you think you can or you think you cannot, you are right."
I love that.
And so, part of my journey has been kind of, just experiencing that failure and understanding that's part of life and business and how you grow. Sometimes it's just through those failures. So, but if you think you can't do it, you're absolutely right.
And I love that quote. And for everybody out there, if you haven't yet, check out Justin's podcast, The Cash Flow Hustle. Awesome show. Justin, if there's a way to reach you or find out more about you, where would that best place be?
Yeah, that is the website too, thecashflowhustle.com. We've got some content on there, guides to success and just ways to set yourself up to achieve, a life of fulfillment and freedom, whatever that looks like for you. There's some things, like you said, if you want to keep your W-2 job and do some other things, there's no one path for everybody. So
that's great. Well, Justin, thank you so much for today. This is great. A ton of information that we haven't really focused on before. So this is going to be great for the listeners, and really appreciate you stopping by today.
Yeah, absolutely. Congratulations on the new edition, and appreciate what you and Peely do.
Thank you so much. Well, this is Jason with the Real Estate Investing Foundation podcast. Thank you so much again to Justin Grimes, and thank you to all you listeners out there. Have a great day. Bye now.
Thanks for tuning into the REI Foundation podcast. Check back next time for more awesome tips and strategies to launch your new you in real estate.